Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, October 24th. Hope you guys are having a great morning so far today. We got a lot of data to go over. This week's been relatively low in terms of the data on the economic calendar, but today is an exception. We got the weekly jobless claims, and last week we had 218,000 people apply for unemployment. This was actually revised a bit higher. It was 214, I believe it was, revised 4,000 higher. And that's kind of an important number because last week, if you recall, watch my video, it was a sample week, and that is the number that they're going to use in part of their calculation uh, for the October jobs numbers. So that's going to be used. So that lower number obviously is much better versus a higher number in terms of people losing their jobs. And so we'll have to kind of wait and see how that rolls out next month. Now, forecasts were calling for 215,000. It came in much lower at 212,000. So pretty good numbers right there overall. We're still keeping very low people applying for unemployment. So people aren't really getting laid off. Employers are more or less keeping their employees. Let's move on here. We got the durable goods orders for the month of September. So in August, it was up 0.3%. However, forecasts are calling for a drop of 0.8%, and it dropped a little bit further to 1.1% drop. Now, if you exclude the big ticket items like transportation, it increased in August at 0.3%, and forecasts are calling for a 0.2% drop, and it dropped 0.3%. So overall, not a good month for transportation. I'm sorry, for durable goods orders for the month of September here. Now let's move on. New home sales. This was revised a little bit lower. It was at 712,000. August, it was revised to 706. Now that was I believe a 10 or 12-year high, which is a very good number here, but still 706, still pretty strong number here. Forecast is calling at 701,000, and it came in at 701,000 annualized units for the year here. So pretty good numbers. Year over year, we're actually up 15.5%. For new home sales. Now, I'm hearing the media is trying to bash the new home sales, make it sound like it's worse, but in actuality, it's pretty strong. Like I said, last week's numbers, even though it was revised lower, it was a 12-year high, and we're up 15.5% from last year. So I don't know how they can, a lot of times they make up these data, and it's misleading, unfortunately. But if you look at the breakdowns and everything, look for yourself. You can dig in deep and probably Google the information. It's not as bad as they're painting it. So let's move on here. We got the market manufacturing PMI flat. So the previous reporting was at 51.1 on these indexes. Anything above 50 is expansion, so it's barely above there, and anything below is contraction. So 51.1, and it moved up, so it improved to 51.5. So manufacturing had a slight improvement in October, and the service section, we had 50.9 in September, and it improved to 51. So barely improvement, but again, better in that direction than the opposite, going to contraction area. And we'll touch on this here in a second here because in the headline news here, stocks are mixed a little bit. They actually started in positive territory. Dow went to negative territory. We had the Q3 corporate earnings reports coming out, and today's probably the busiest day for this. We've got a lot more in terms of being released corporate returns, and there's a few big companies that kind of disappoint in their corporate earnings reports, which is kind of dragging the market down. The ECB, Mario Draghi gave his farewell speech today for a policy meeting. Pretty much everything's in line. Next week on the November 1st, Christine Lagarde, the former head of the IMF, will be taking over the ECB. Now, investors will be watching this because she could have a completely different idea on how to what she wants for policy. Now, he's been a person who has been doing whatever it takes to get the interest rates low. He's one that got to negative territory, negative interest rates, trying to get spike inflation and to really no prevail. Christine Lagarde might be somebody who might let the interest rates rise, and so that's something that we're going to watch. And if that happens, global yields could potentially pick up, even affecting us here, and that could put pressures on mortgage-backed securities or mortgages, which could push those lower. So this is something we will want to keep our eyes on. Germany reported, as I was mentioned before, the market PMI manufacturing is had a slight improvement. They were like a decade low in terms of their manufacturing. It was at 41.7. So talk about contraction. It just moved to 41.9. That's how bad things are off. And Germany's the largest economy in the European community, and so that basically shows you how badly they're struggling. So let's kind of move on here to the mortgage-backed securities. We're up about 6 basis points. We've been kind of fluctuating. We're up as much as like 11, 13 basis points. We're right at the 100-day moving average. This is a pretty tough ceiling to break above here. As you see here, it looks like we had the crossover, but if we can't break above this, we could have a sideways pattern trying to, just continuously trying to break above it. Hopefully we can break above it and continue this trend upwards, but we did have the stochastic crossover, as you can see here, as a black line cross over the red line here, and hopefully it'll get us back into neutral territory and bring us back upwards. But we'll have to keep our eyes open. We need that extra push in there. So right now, again, mortgage rates are about the same as where we left off yesterday, so there's really no change in mortgage rates. Yields, as you can see here, we're kind of in this sideways pattern here, and looks like it's in the verge of the crossover here. Right now we're only down about 1, so we're sitting right around just under 1.75 here on yields here. All right, so that's pretty much a wrap for the day. Again, mortgage rates are about the same. If you guys are looking to buy or refinance and located in California, I'd love to hear from you guys. I am a loan officer with Pinnacle Home Loans, and we help service a lot of different people and provide solutions as we got a lot of different mortgage programs to assist those people. So if you're looking to do planning for yourself in terms of either buy a home, first time homeowner, we can help you provide the financing for that. But we also got solutions for those who want to pay off the mortgage sooner, to those who want to have that retirement, looking towards retirement, looking college planning, different things, strategies we can help you in those terms. So again, just reach out. Best way to reach me is direct message me or go ahead and email me. Email is probably the best of the two. Hope you guys, and again, look forward to hearing from you guys. You guys have a great rest of your day. Thanks so much for watching. We'll catch you guys tomorrow.